In this video, I'm going to show you how you can decode financial markets via this free printable template available at ctksmethod.org. By doing so, you can take care of your portfolio and you can identify emerging opportunities and emerging threats. Let's run the numbers. I'm going to give you the 10,000 foot view on this particular cheat sheet. What we can see, the US 10-year, the US 2-year yield, this is like the saving interest rate, and this is like the mortgage interest rate. They've been very under pressure for the past month. They've been strongly negative, and we can see the trend is continuing in that strongly negative direction as well. This is also affecting the US dollar currency index, or the DXY, which has also been under strong negative momentum. Not surprisingly, the dollar-yen combination in Forex is under severe negative momentum, and going to the other side of the Forex pairs, the Aussie dollar and the Euro dollar are looking really good. When the DXY starts to tank down, expect gold and silver to rally, especially when combined with the yields. That is yield weakness. Yield weakness is a very important thing to track. As we can see, the yields come down and the dollar come down. That's led to a broad-based rally across stocks and across crypto. Crypto has been exceedingly strong, not just total crypto market cap, Bitcoin, Ethereum, Solana, ADA, Doge, and we can see a couple of laggards in here. Bitcoin Cash, XRP, BNB and Litecoin have been consolidating for the past month. I've been really interested in Bitcoin Cash and XRP just recently. I love to see weakness and the potential turnarounds because that is the ideal time to start layering in. We can see in terms of the S&P 500, it's really strong, but the Nasdaq is starting to get up into some degree of resistance, is starting to consolidate. Tesla and Nvidia have been doing quite well, as has Microsoft and Apple. Apple is still weakly positive, but when we look at Microsoft, Nvidia and Tesla, they're starting to retrace. This is quite normal because its price is always moving in a wave. We've just gone through 28 charts together. Not a bad thing to do in 2 minutes. We can see the Fed meeting coming up is 2.7% probability of a rate hike. It was 1.2% yesterday, and that's what sparked off a big surge inside the crypto market in the past 24 hours. Let's have a quick bolt through the market. We can see gold. Gold has been doing exceedingly well. All of these charts are marked up from the peak of the Bitcoin bull run that occurred around the 10th of November 2021. So this covers off a lot of period of time. We can see gold has been doing exceedingly well, but this is because the 2-year, the 10-year, the DXY have all been plummeting. Bitcoin itself is exhibiting strength. We can see it's just trying to get above this particular area, but when you understand structure, you know from the 40,000 plus mark, there's basically a steel wall of overhead resistance. The S&P 500 is coming back to recent highs. When price does this, we can get a little bit wobbly in this particular area, but Bitcoin is showing the path. Bitcoin is a very risk-on and risk-off asset class, and you can see Bitcoin and the S&P 500 pretty much work together. There are specific crypto-only events that cause things to go out of alignment, but you can see over the past 700 days, they're pretty much in alignment. Total crypto market cap is looking really interesting this month. Due to the structural levels of the CTKS method, I'm not going to put them on right now. I'm just going to talk very generally about them. We don't have the same structural overhead resistance that we have in Bitcoin. This means the alts can rally. There is typically an inverted relationship between crypto and the DXY, and you know crypto is also very strongly associated with the stock market. They move in the same direction. We've seen the DXY come down and crypto come up. This is not by accident. We're looking for continued weakness inside the DXY to fuel this rally inside crypto and the stock market. And of course, that's going to convert itself into wide-based rallies in gold and silver. Thank you to everybody who commented on yesterday's video. We're so happy that this cheat sheet has been really helpful to you. You'll find that the more that you look at it, the more familiar you will become with the markets. You'll be able to identify opportunities and risks as well. If you're liking the video so far, please smash that like button. And we'd love to have you as a part of our global family. You'll find that we have one of the best communities on YouTube, just amazing people. Solana has been on a monster run recently. It's just petering out in terms of its upward momentum. It's not matching that of Bitcoin at the current time. Typically what people do, they cycle out of the strong and into the weak. That is the professional side of the market does that. Of course, it doesn't mean that Solana can't go up. It can, and it's really a very good project. When we look at XRP, you can see this negative momentum for the past month. That's why it was red on the cheat sheet. And you can see it's starting to turn around as well. This is what I was saying. When things go up and up and up, they can just get sector rotation or project rotation, and it comes down and for a month, and then it goes up again. This could happen to Solana, just something to be aware of. With the CTKS method, we don't care where price goes, we're taking advantage of it, and we go long at spot, but we have a very specific system. We can see gold has absolutely been going nuts because the DXY and the yields are tanking. Gold is looking fantastic, but these particular price waves can get overdone. Expect a retracement because price is just moving in a wave. ADA performed really strongly in the past month. We can see just like Solana, it's slowing down a little bit at the moment. Junk bonds is a really good risk on or risk off indicator, and we can see the risk is still on inside the main markets. The US 10-year yield is doing exactly what we want it to do. We want it to come down because that makes crypto, the stock market, commodities like gold and silver go up, and gold heading into the Christmas time. Wow, that's a good time for gold historically. Ethereum is looking quite advantageous. It's really strong, and that's been decoded on that cheat sheet. Microsoft is just undergoing a slight correction at the moment. Litecoin could also be quite explosive in the upcoming month. Tesla is under a bit of negative price momentum, but it's seeking to come back into consolidation. If the dollar and yields keep on falling, we would expect Tesla to break out of this and start to go up. Bitcoin is giving us a very good risk on and risk off signal. It's risk on at the moment. The Nasdaq is also looking quite good. It's had a little bit of retracement just recently, but that's to be expected when you come into previous highs. Apple has been going utterly parabolic, and it's got a crossover here. It's looking to make its way up to that 195.96 area. Everything that you see is being fueled by the US 10-year, the US 2-year, and the DXY all plummeting. Bitcoin Cash is looking increasingly attractive. We got a very substantial crossover. We could get some really good upward price momentum. For the past couple of days, I've been calling out Bitcoin Cash as something to look at if you're a trader. Traders never fall in love with any specific project, and they never hate anything either. Doge did incredibly well in the past month. We can see that it's still got upward momentum, but it's starting to just consolidate right at the moment. Nvidia has been an absolute powerhouse. It's in price discovery at the current time. Silver, just like gold, is very victim to the yields and the DXY, and we can see silver has been very responsive to the decay in the yields and the decay in the DXY. The US 2-year yield is starting to curl over, and if we get continued negative downside momentum, that is phenomenal for stocks, commodities, and crypto. Copper is getting a crossover, and it's quite a substantial crossover. Don't forget, price is always moving in a wave. It's always up and down. It means it's never all up and never all down. It's just wave-based price action. But copper is looking good. BNB, the coin for Binance, of course got hit by that $4.3 billion fine, and it has since come down quite substantially. But it's likely to turn around because no alt can escape Bitcoin's gravity. This is just a part and parcel of the crypto market. If Bitcoin is going up and total crypto market cap is going up, you have a 99% probability that everything is going up with it. It's really important to look at the euro dollar. The euro dollar gives us an indication of the weakness or strength in the DXY. We've seen the euro dollar come up in strength. That means that the DXY is declining in strength. We can also see that there was a bit of a pullback. Now potentially the euro dollar could turn the corner and go positive. That's exactly what we want to see, because that shows DXY weakness. That also brings us into dollar yen. When dollar yen is decaying, we expect the DXY to decay, the euro to improve in value, and the Aussie dollar to improve in value as well. If the Aussie and the euro are coming up, you can bet your bottom dollar the crypto is following it. And we can see weakness in dollar yen. This is good because we want to see weakness continuing inside the DXY to fuel rallies inside the stock market and also crypto. We've also seen broad-based declines in oil. Basically, everybody thought that oil was going to go to the moon. It was going to come back up here to this $120 per barrel. But that's not the case. Oil has been dealing with internal structural resistance. Unfortunately, the VIX has become a legacy measure when it comes to understanding which way the markets are going. It still does exert some influence, but it's not the same as it was 10 years ago. We can see that the drop-off in the VIX is largely due to the decay of the DXY and the yields. It's more important to look at the US 2-year, the US 10-year, and the DXY together. The VIX gives some degree of confluence, but not that much. Coming back, we can see that the DXY and the yields have been under tremendous amounts of pressure. The euro is just consolidating at the current time, and we can see that we're finding opportunities across the crypto market. Step 1 is to decode financial markets using this cheat sheet. It will give you an incredible insight into where financial markets are going and how one thing is impacting another thing. That's mission critical information. Doesn't matter if you're investing or trading, you must know about interdependencies and intercorrelations. And this free printable template is available at ctksmethod.org. The second step is to look at CTKS structure. All charts are not created equal. We have the Tier 1, Tier 2 and Tier 3 charts. The Tier 1 are the engines of financial markets globally. We use CTKS structure to determine if there's going to be a reversal or a continuation. When we look at Bitcoin, we can see that Bitcoin overcame a level of structural resistance, converted it into support, got above the next level, and is encountering a degree of overhead structural resistance at the current time. Above this particular area, there's a lot of structural resistance. A lot of people think that Bitcoin is going to go to the moon. The truth is, it's going to structural resistance and structural support levels. Total crypto market cap has a very different structure. There's so much underpinning support. It's broken out and converted this level around the $1.444 trillion mark into support. It's come up and tested the $1.47 trillion level of structural resistance. And these lines are not normal lines. They've been drawn out across all of price action with a completely revolutionary method, a standards-based method that reveals where smart money is buying and selling. A critical thing to keep our eye on is the DXY, and when we look at the DXY, we can see it's sitting on multiple levels of structural support. That's why it's been rejecting further downward price momentum. The DXY is very constrained at the moment because above this 103.7500 mark, there's an absolute atomic brick wall of structural resistance. But just bear in mind, structure indicates where price waves up to and waves down to. Structural support is always a safety net. Structural resistance is a ceiling. With this in mind, how do you think the markets will play out in the next 24 hours? Do you think that the DXY is going to bounce up from structural support and start to rally, and that will pull the yields up with it? Don't forget, even in a long-term negative downtrend, price can move up as well as move down, so please be aware of this. This is your most important chart to focus on at the current time. And what we're looking at with these specific lines, this is over 20,700 days worth of standards-based analysis on price action. If you would like to get the X-ray vision, you can just pop across to ctksmethod.org and you can pick up those indicators for your charts. And don't forget to pick up your free printable template at ctksmethod.org for decoding financial markets. This is a very simple sheet, but it just gives you so much power when it comes to understanding how markets are moving and why they are moving in that direction. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.